She fell down the Bitcoin rabbit hole pretty much by accident, but she considers it a very lucky accident. She's the CEO and founder of, and chief AML ninja of Outlier Canada. She's a ninja because if she does her job right, she gets in and out and you don't even realize that she was there. She does her best to keep her clients out of trouble, demystify regulation, and educate regulators about blockchain technology. It's my great pleasure to introduce one of the world's first CBPs, Amber Scott.
Thank you. It's always good to be at an event with you, Michael. And Michael and I did our first presentation, or the first presentation I ever did on Bitcoin together at a banking conference in like 2014, to like a weirdly large room with strangely few people in it because no one cared about Bitcoin at the time. But it was a lot of fun, and we got to know each other building that presentation. I always like to start with just, here are the things that I said I would talk about. So at the end, if anyone feels like I didn't cover any of these, and you want to come bother me and ask me questions because I didn't hit a topic that you wanted, then please do that. And being a compliance geek, I always start with some hefty disclaimers. So I'm not a lawyer. This isn't legal advice. I don't represent any government or government agency, so I talk a lot about what different governments do, what different law enforcement agencies do, but the stuff that I say isn't their official position. And I think most importantly, information wants to be free. So if there's any aspect of this presentation that you want to use that is useful to use in another context, you don't need my permission to share solid information. Just go and do that thing. I want to start with just explaining compliance and regulation and where the differences between those things are. So regulation, I'm going to use to mean just loosely, here's all the stuff that we have to do. So here's what we're required to do according to the law, according to regulation, according to guidance that's issued by different regulators. And I'm just going to lump that together under the term regulation because it's easier than saying law and guidance and regulation and other legislation. And then compliance is everything that you do in order to meet those requirements that are set out in regulation. Compliance and regulation have a lot of different flavors, and what I'm going to do is go through each of those in their own little section briefly, but I want to cover some high-level things first. And I think the way that this is put together is really inspired by the way that we've worked with different startups over the years, but especially by a really long dinner that I had with a friend of mine who's the CEO of a company and his employee number one developer, who just said, look, here's the company that we're starting. What stuff do we have to give any damns about whatsoever? Where are we going to get ourselves in hot water? Why do we have to care about it? And my friend I'd worked with before, I had done compliance for a different startup that he'd worked with. For his developer, it was the first time that this guy had ever engaged with compliance. And at various points, he was just grabbing his head going, oh, I don't want to care about any of this. I don't want to care, but I know that it's going to make what we're doing better. And he had really great questions throughout. So I always think about that as being one of the markets that we really need to serve to help builders plan and make things. One of the things that I want to talk about generally before I get into any type of compliance and regulation is this fundamental tension that always exists between compliance and regulation and technology itself. So usually when we're talking about technology, it can get to market fast and it's universal. So I can deploy an app and it's everywhere in the world, and it's everywhere in the world today. When you're talking about compliance, when you're talking about regulation, regulation is really slow to change, and it can be entirely different in different countries. It can be entirely different within the same country if you're moving from one state to another, where you have these different regulations, different requirements that you have to track to. And I think this is really the fundamental tension that we see between technology and regulation. That's not exclusive to blockchain. You don't need a blockchain for this to be true, but I think that it's particularly salient in our world because we do look at projects that are intended to be open, that are intended to be distributed, that are intended to be borderless, and these become very important considerations. I love startups. I love working with startups. There's nothing that I do that I think is more rewarding in my work, and we work with banks, we work with very well-established companies, and I tell them that working with startups is one of my favorite things. But when I work with startups, there's one really important question that I need any of my startup clients to be able to answer for me before I'll agree to work with them. And that's, what problem are you solving? The reason that's important to me is that compliance can be so different depending on what you're doing. And if you can't explain to me what problem you're solving and how you're about to solve it, and you want me to, let's say, design policies and procedures, I already know you're going to pivot a whole bunch of times. And every time I have to redesign that program because you're pivoting, you're really mad because you have to give me more money. And it's not that you mind giving me money, I'm really good at my job, but no one likes paying for a compliance program 17 times. And what I've learned is, if you can answer this question with conviction, then we're probably not looking at that situation. If you're not sure what problem you're solving, you're probably not ready to do compliance work yet. You need to evolve a little bit more as a company, and that's okay too. And I want to jump in with the most common question that we get from startups, which is folks will come in and sometimes very nervously say, okay, so either we're going to do, or more often we are doing. So we've been doing this. We've been in beta for a couple months. And here's what we're doing. And we've done nothing for compliance. And we just learned that compliance existed last week. So we called you and we asked for a meeting with you guys. Are we going to end up in an orange jumpsuit? How bad is it going to get? Number one question. The second question, ironically, is Uber gave no damns about any of those things. So after I sit down with someone and here's the laws, here are the things that are going to apply to you, Uber didn't give a damn about any of those things. So many companies didn't give a damn about any of those things. They scaled quickly. They were able to deal with the legal stuff after. Why can't we do that too? And I think there are some interesting answers to that are important to address at the outset. And part of that is that Uber was dealing with very different types of regulation with very different implications. And so if you're talking about a highly regulated industry, for instance, anything that has to do with money, which is most of the work that I do, that's really regulated. There's intense laws and regulations. Those regulators have a lot of power. So if I'm offside with the taxi industry, the odds that I'm going to end up in that orange jumpsuit, relatively low overall. Those really aren't the powers that they have. If I'm offside with financial regulation, especially here in America, that goes in a different direction altogether. And so you really have to understand your context. You have to understand the spaces that you're playing in, and you have to understand where that risk is for you based on the problem that you're solving and how you're executing on that. In terms of companies that I work with, and this doesn't matter if it's a very big, well-established company or a startup, the most common failing that I see across the board in every type of compliance is a failure to document. So when we talk about these things in terms of what kind of compliance that you have to do, you have to not just do that stuff, you have to be able to prove that you've done each of those things. And so prove doesn't have to be like a really mathematically intense type of proof. Proof can be, we kept a record, we wrote it down. When we made the assumptions about why this wasn't a security, and we talked to our lawyers about it, for instance, we documented that thing. We didn't just have a conversation among ourselves and say, okay, that's good enough, next. So anything that you're doing all along the way, you need to document that. It needs to be something that you can show a regulator, that you can show an auditor, that you can show an outside third party that they're going to understand. And when I talk about level of documentation, I always think about it like, if I wrote this down, could somebody that was not involved in the situation, that didn't know me, that didn't know the client, that didn't know the company, anything about the situation, come in 2 years later and read the documentation and understand it? And that matters. And if that sounds really stupid, we had a bank client whose compliance officer left the organization very suddenly, and she left right before a regulatory exam. And in a lot of cases, they had things that were in her notes, but they were in her shorthand, which was kind of a special language that was really difficult for anyone who wasn't her to understand, and they had no means of communicating with her or getting information as they went through this regulatory exam. And that led to people on staff, staying for 14-hour days over the course of a weekend to try to pull and parse out any notes that they could to prove that they had actually done the work. And the work had happened. It's not that the work was bad. It's not that they were offside with anything, really. But they could have been in a lot of hot water because they didn't have it documented in a way that made any sense. When I think about my mission, and maybe some of your missions today, if you choose to accept the mission, it really happens in two parts. So for me, part of my mission is helping businesses understand what they have to do from a regulatory compliance perspective. And the other half of that is that I push for better policy. So anytime there's an opportunity to interact with government, to try to talk about policy, to try to make things better, my team and I participate in that. We try to bring in people from industry for those types of consultations. And so the running joke is that I spend a lot of time trying to explain regulation to Bitcoiners, and then a bunch of time trying to explain Bitcoin to regulators, so I have no friends. Someone very generously said to me the other day that meant that I have friends everywhere, and which part I believe is true maybe is dependent on what day it is. I'm going to start in banking and payments, because I think this is probably one of the most regulated areas in the world. And with good reason, although we don't always get it right. And for what it's worth, the banks don't always think that we get it right either. But there are two ways in which this regulation can touch you. And part of it is, are you doing something? Are you holding people's funds? Are you doing payments? Are you doing something that is custodial? Financial services regulation can touch you in that way. The next piece of that is that you have a relationship with financial services providers. So for most businesses, we don't exist, we don't thrive without a bank account. It's very difficult to do that. We're going to touch fiat at some point in time. And when that happens, there are additional rules that are going to be put on you and put on your business by your bank. I'm not going to ask for a show of hands on this one, but has anyone ever experienced de-risking? So has anyone ever had your bank unceremoniously close a bank account on you for reasons that you don't understand? Who's willing to share your story? No? Okay. Please.
That's not my bank, but Belize was de-risked a few, I think 2 years ago. Several banks in Belize were de-risked, and their corresponding banking was shut down. So that was a country that.
Yeah.
That's even worse, because then you can't buy oil, you can't exchange your goods and services for the citizens, and so it's at that bank level, but it's the same idea.
Yeah, and that happens. It does happen to banks in terms of the correspondent network. It happens to different businesses. It's happened. We had an interesting situation in Canada where the Canadian-Iranian community actually just in general received letters from a particular bank that said, your accounts are being closed. Sometimes the letter was dated earlier, like much earlier than when they actually got it. So it was essentially your account was closed last week. You're finding out about it today. So this phenomenon is called de-risking or debanking. It's relatively common. And I've seen it a lot in the Bitcoin and blockchain space. There's a colleague of mine who had blockchain in the name of their company, who recently changed the name of the company because when they were talking to their bank was like, yeah, we don't think we can deal with you. And it wasn't about their activities. It wasn't about their risk. It wasn't about their compliance program. It wasn't about their cybersecurity. It wasn't about any of those things that you would think, okay, this is too risky at a bank. It was because they had blockchain in their name. So they changed the name of the company, and now they're fine. With Bitcoin. Yeah, and your company at the time, may I say what they did? So at the time, Michael's company was doing cybersecurity. Cybersecurity consulting. So when you think about it, for me to walk into a bank as a compliance consultant, if it takes me more than an hour to open an account, I'm furious. That is an inefficient process, and even an hour is a pretty inefficient process, frankly. So the idea that that would be any different for a cybersecurity consulting company is baffling to me, because that is not a high-risk model.
They told me that they don't allow anyone who deals with Bitcoin to open a bank account. And I tried to tell them that I charge for my hours. I help my clients with cybersecurity, and they pay me for so many hours of consulting work. They said, yeah, but you have Bitcoin in the name, so we can't allow you.
And that's crazy to me. We as a company have been accepting Bitcoin payments since 2013. I always feel like I should be careful when I say that in presentations, but I think maybe I'm also too much of a loudmouth and too involved in too many industry associations for them to really want to do that, but also our activity is so boringly vanilla. One of the funniest things that I heard from one of my bankers is, well, as long as the Bitcoin doesn't go through our bank. That was my response as well. But then I actually tried to have her tell me, like, how would it go through the bank? And she's like, well, if the Bitcoin went into our account. I was like, okay, cool. I'm going to tap out there. I promise you that will never happen. Unless you enabled the accounts for that somehow, that's never going to happen. You've effectively prevented me from doing that. We're good. She was like, okay, great, secure.
Emails need to have a stamp on the email to make it official. You don't understand.
Exactly. But she was happy and I kept my account. So, but these are all things you have to think about. So in those communications, it's not just what you're doing on your own, it's how you're communicating with your bank. It's those rules that your bank is pushing down to you, either because it's their internal policy. Sometimes they've had an exam with their own regulator where the regulator has suggested to them that they should have certain conditions or that they should treat certain types of clients as being higher risk and do certain types of things. So you have to pay attention to those. When you get a letter from your bank, that says, hey, we're reviewing this piece of information about your account, please treat that seriously. Answer it in full sentences. Don't hesitate, answer it on time. Don't hesitate to pick up your phone and call your banker and say, hey, I got this letter. Help me understand what it is that you're looking for. I want to make sure that I get you everything you need. And get it to them in writing, because the person that you are dealing with at your bank is not the person who makes the decision about whether or not you keep your account. That's someone in a compliance department who isn't talking to you directly. So the more that you can arm the person that you're dealing with, who's frontline at your bank, with solid information, the better off you'll be. And I actually suggest doing really brief, like not 50-page investor deck, 3 to 5 pages maximum business plans that just talk about, here's who we are, here's what we do, here's how money comes in, here's why our management team is actually qualified to do what we do, and giving that to your bank as part of your package, because that's really helpful to them. Then when that compliance person has a question for the branch and they're saying, hey, what is your company actually doing? They'll just turn around and say, oh, here's this nice 3-page business plan they gave us. Let us know if you have any questions. And some of the time the compliance team turns around and gives that to the regulator who's asking a question, because they also have to prove it to their regulators, to their auditors. Anti-money laundering, or AML. This is it's been my primary area of practice for a long time. My colleague Rodney did a really excellent presentation yesterday that covered a lot of it. But I want to talk about a couple of things that have happened recently. The Financial Action Task Force, or FATF, has issued guidance for virtual asset service providers, or VASPs, which is my least favorite acronym because I can't pronounce it without sounding like a snake. Just VASP. And virtual assets. All of the G20 countries at this point have committed to implementing these things within the next year. So if you're running a company that is an exchange, that is a brokerage, that's dealing in digital currency, and you're looking at it and thinking, forget about AML, it's never going to apply to me, it's going to apply to you. It's going to apply to you in the near term, and this is one that's really different in terms of how it's implemented between regions. So it's not enough to look at it and say we're following this International Financial Action Task Force guidance. You need to know the specific laws for every country that you're dealing with. And it can be quite different in terms of its implementation and how you actually do it from place to place. And whether or not it applies to you can be different from place to place. So for instance, if you're in the US, If you have a customer, one single customer in the U.S., then you need to comply with U.S. legislation, and that's the position that the U.S. has taken. Canada, where I'm from, has taken a different position. So right now you have to have what's known as a substantial connection to Canada. So there's very specific things that have to be, you have to have people working in Canada, a location in Canada, a server in Canada. There's a couple of other conditions that can fall under that. And there's also, within the next couple of years, foreign companies are going to be brought in a different way. And I'm interested to see the guidance, because this is very new law in Canada, when it comes out on that, to tell us what that looks like. But in essence, it's going to come down to, I think, are you targeting Canadian customers? So the idea there is that if you have an online exchange, and it's not advertising to Canadians, it's not taking Canadian dollars, but I could stumble upon it and wire money to it, then you don't necessarily need to be in compliance with Canadian legislation. But if you're targeting Canadian customers, then that's a different story. So those are things to pay attention to. And this is one of the areas where it's really important to understand the nuance of where you're doing business and how you're doing business in those locations. Privacy, which sometimes seems in direct conflict with anti-money laundering, because from an anti-money laundering perspective, you're usually collecting a lot of information that you need to use in different ways, and privacy starts to talk about only collecting what you need to collect and protecting your customers in terms of their private information, their personal information. So personal information, generally speaking, is anything identifying about an individual. So it's not saying we have a customer who is a 41-year-old female. It is saying we have a customer whose name is Amber Scott, and she is 41, and she lives at this address. So as soon as it's coming back to me as a person, that becomes personally identifiable information. And if you have this, there's some pretty important questions that you have to ask. How much thought have you given to consent? So where are you getting that information from? Did I give you that information? Was that information taken from a third-party source? If it was, did that third-party source get my consent to give that information to you? Did they get my consent to share that information at all? So one of the fun things that I see in the privacy world is sometimes people will get information from different list vendors, and then try to, do a blast or a send out or market to those folks. And that's a pretty dangerous game at this point. How about security? So if you've collected a bunch of personal information, are you doing the things that you need to do in order to protect that information? Do you plan on holding on to it forever? Because in terms of privacy principles, you should be holding on to that information for as long as you have my consent to do so, for as long as you legally have to have it. So if it's a thing that you had to collect because you're regulated from an anti-money laundering perspective, you have to keep that information for a certain number of years. What happens when that number of years is up? What happens when you shouldn't be keeping that information anymore? Do you have a way to age it out of your system? The thing that I will say about personal information is that the risk never goes away. So let's say you have my financial data from 1989. When you get breached, not if, when, because data honeypots will eventually all get breached, in my opinion. When you get breached, the fact that you had my financial data from 1989 still means that you had financial data. It's still a risk to you. Do you think my financial data from 1989 was particularly useful to you at any point in time if you had that at 2019? Probably not. So there's this inverse curve where the utility of the data just goes down over time. It stops being useful. But the risk never goes down. In fact, when you have a breach and you have old data that you had no business having, there's a lot of bigger questions that get raised in terms of what your aging off practices were. And then another really important piece in that is of course, what happens when you get breached? So how do you deal with that? What jurisdictions are you dealing with? Because there's really big differences in terms of when you have to notify people, what you have to do when you notify people, what time frame that's in, what regulators you have to let know that this happened. And this is a really big deal from place to place. Anyone from California in the room? How many notices did you get last year? Many. So California has really intense breach notification laws. It's the region that is the most intense that I know about. And all of my friends who are in California tell me that generally it's kind of hit a point where they're like, yup. But I think it's fascinating that they actually know when breaches have happened. It's not a compliance investment per se, but I think investing in good cybersecurity defenses, investing in good auditing, so just knowing where your potential weaknesses are, where there's a potential breach, and having a plan in place for when that happens is well worth its money. One of the funny little things that I learned this week was that sometimes insurance policies actually have an allowance in it for proactive cybersecurity measures. So when you leave here, maybe call your insurance person and say, hey, do I have any type of allowance for that? Is there anything in my policy that would just pay for that for me if I was proactively doing auditing to make sure that we're in a good place? And I think that's one of the best possible privacy practices that you can implement. Consumer protection is always one of my favorites because 90% of it falls under a super simple question. Is it true? Not every second Tuesday when the moon is full, if I stand on one foot and squint at it, does it look kind of true-ish? Is there truthiness there? But is it actually true? And if the statement that you're making is actually true, the vast majority of consumer protection stuff is going to go away. There's going to be a lot of other little things depending on the industry that you're in, and those are really going to require experts to navigate. So if you're in banking or payments or financial services or securities, there's really specific disclosures that you have to make. They have to be made at a particular point in time. Sometimes they have to be made in a very specific font and font size. And these are things that are going to vary a lot by industry. If you are producing a physical product, then there are certain things that have to go in the package. So those are all types of things that you need to pay attention to. But honestly, the biggest one in terms of consumer protection is whether or not your messaging is true. And one of my friends who's a marketer said something really cool to me back in the day, which was, Amber, I think everything that you do in this area of compliance is really stupid from a marketing perspective. And it's stupid because we should not be effing up this way. We should be thinking about the higher level issues. It shouldn't be about, is it true? It should already be true. And our concern should be, is it on brand? Is it representing us in the best light? You know, is this the best way to put it forward? Is this the best message that's going to connect with our, with our audience? The idea that there were people that were part of that team that were coming up with statements that weren't true was infuriating to him, and that was fantastic. He's one of my favorite marketing people to this day. Securities. So I want to start by just some of the absolute FUD and myths that I've heard in the securities world, especially around ICOs. Incorporating in a foreign jurisdiction is not going to save you. So if your intent is just like, we're going to set up a corporation in Switzerland, and then we're going to have an ICO, and we're going to sell our ICO to Americans, and we don't think we're going to get boned, congratulations, you're boned. And you deserve to be. The words that you use to describe your product aren't going to save you either. You can think of the most beautifully eloquent way to describe a share that doesn't use the word share. You can call it an ICO or an IEO or any other 3-letter, 4-letter, 5-letter acronym that you so choose. But if what you're doing is issuing a share, you're probably also boned. And despite this, I'm going to say that I think that there are a ton of incredibly compelling use cases for securities tokens. As a compliance geek, one of the funniest things to me is that if you were to talk really honestly with the auditor of any Fortune 500 company, and you were to ask them how many shares that Fortune 500 company has outstanding at this very moment, with any degree of precision, there's no answer. There's no precise answer. There's sort of an answer, and there's an accepted method of accounting that says, ish, this is what we're going to do, and this is how we're going to value it. But when it comes to the idea of tokenization of securities, I think this is the most brilliant, compelling use case, is that we can have real, precise accounting. But attaching a token to it doesn't take away any of the other rules that exist around securities. So if you're looking at what you want to do, and it's a security, then be aware that all of those different types of security rules that apply for the jurisdictions that you're going to serve it up in are still going to apply. The other thing that's really important to know, because I think for a lot of people there's frustration where they're saying, well, so many of these projects have happened and there hasn't been enforcement. Enforcement takes a long time, sometimes years. And what we're seeing now is the start of enforcement for projects where they've been investigating those projects for years. So I think that there are quite a few folks and projects that think they're in the clear that haven't been. And there are definitely folks that I know and like that have received letters that in essence say, with this particular project, we're not going to pursue action against you, but understand that if you were to do the same thing again, we will very ardently pursue action against you. Industry-specific legislation. So depending on what you're doing, there can be a lot of regulation. And what I've got here are just some of the most regulated industries. So if you're touching health, part of that is privacy, part of that is very sensitive personal information, people's finances, real estate, electricity, oil and gas, auto, food, construction, and communication. And communication including telecommunications, ISPs, things like that. There's very specific legislation that applies to each of these. And so if you're looking at any of these things, and this is where your play is, then you really have to look at what's specific to that industry, and what's specific to that industry in the jurisdiction that you want to play in. In most of these areas, companies don't start off by being international in any of these areas. They start off within a particular region, and they grow to other areas because they have to be able to take in the requirements for those regions. So that jurisdiction-based piece, the scariest calls I get are sort of those, so we want to deploy everywhere in the world, we want to deploy everywhere in the world next week, we have no compliance program yet. Can you build it for us in a week? Also, are you an expert on the whole world? Nobody is an expert on the whole world. There are folks that know a lot of things about different jurisdictions, but to really get down into the minutia of what's happening is very nuanced, and it's almost like speaking a language. And so if anyone told you that they spoke all of the languages in all of the world, you would tell that person that they were probably lying. You wouldn't believe them. And it's similar. If someone tells you that they can do a nuanced version of all of the compliance in all of the world, heck, if someone told me they knew all of the privacy laws in all of the world, I don't think that that's possible. So be very wary of that. And when you're looking for experts, know the jurisdictions that you want to go into. Know what's interesting for you and where you want to play, and find the right people for those jurisdictions. But don't start off looking for someone who's going to solve all of your problems in all of the jurisdictions. What happens in our practice is that sometimes we tell people, nope, we're very focused on Canada, we have a partner in the UK, we have a partner in the US, we can hook you up with different folks in different regions, but you have to work through those regions, independently. They'll say, oh no, we met this other guy, and this guy's an expert on all the regions. And then they come back to me in a year and they say, we've just had a really terrible regulatory exam and we've been told that we have to fix all of the things. Can you please help us with Canada? And can you introduce us to that other person in the US? Because we have an exam there in 2 months and we think it's going to be the same. And it is. So look for the right people in the right places at the outset. In terms of some best practices that I think are really important for startups, I think Rodney covered the investor piece really well yesterday, so I'm not going to go deeply into it here, but look at your investors. Look at who's part of your company, and know that the person who is holding the purse strings can cause trouble for you. If that's a person that has a criminal past, if that's a person in the securities world that has a no trade order, that isn't allowed to be the CEO of a company, that can cause trouble for you if they own a substantial portion of your company. Hire quality folks that understand their area of practice and teach them about the stuff that you do. So if you understand tech and you understand blockchain really well, go steal a compliance person from a bank. There are tons of folks in traditional industries that love the idea that they could do more meaningful work. They could work with a startup. They could do something that was more exciting, that was more engaging, where they would have more responsibility, and they know their stuff in their area of practice. I think that it's much easier to take someone with an area of expertise and just teach them what you're doing and let them figure out how to apply it and where it applies and marry those two things together than it is to look for someone who knows both of those things. There's some really rare people, like I know 5 lawyers who code right now, and they're like my little team of unicorns because they're super rare. It's much easier to bring in someone who has an area of practice that you need and teach them about your tech. When you build with your compliance requirements in mind, but build with enough flexibility to know that it's going to change. Regulation is slow to change. And generally speaking, when we have new regulation that comes out, you've got a year or 2 to get it into place. So usually it doesn't come down to say, okay, here's a new rule and everyone has to have it in place tomorrow or you're getting fined. It's here's a new rule that's coming down. But oftentimes there's a lot of nuance and we need different policy interpretations from regulators to understand if we're applying it in the right way. And that year that you have to get it in place goes by very quickly. So build the systems with enough flexibility to allow for that. And build them with enough flexibility to allow for requirements in different jurisdictions. So if you know right now you're deploying in 4 different states in the US, and that's your starting point, and those states all have really similar requirements, you still have to be able to think about what happens if the requirement is different in another state. What happens if there's a lower, say, dollar threshold? So what happens if I have to identify someone if they do a $500 transaction and not a $1,000 transaction? And you have to build in enough flexibility for that to move within your systems. In terms of compliance strategies, talk to experts early on. And honestly, like most experts, whether it's a privacy person or an AML person or even most lawyers, will just have a conversation with you early on. I'm going to put cybersecurity folks into this category as well, but talk to those people and figure out what it is you need. That's going to help you set your budget. That's going to help you figure out what you need down the road. And you might not be able to do all of the things right away, but at least you can start thinking about it and prioritizing it and slotting those things in. And most of us will talk to you and give you some good information for free because whether or not you ever hire me, I want to see you succeed. I don't want to see companies fail, especially not because of this stuff. Find the most qualified people in your local markets. And sometimes that comes from just asking. Compliance, generally speaking, isn't a thing that people consider to be a competitive advantage. And so go and talk to your potential competitors. See who they've used for cybersecurity, for compliance, for privacy, for AML, and if they're happy with those folks. And usually they'll be willing to give you a referral for that thing if they're happy with the person that they've worked with. Look for those opportunities to engage with regulators and policymakers. And I get on a soapbox about this all the time. But I think policymakers have a really hard job. Usually they're writing things that are going to apply to a ton of different industries. And whatever segment you're in, you're lumped in with a bunch of other folks. And if no one's telling the policymakers what the differences are, what the nuances are, they're not going to understand it. So don't wait for somebody else to do it. Don't sit by and be passively dictated to. Get actively involved in those conversations. I think it's incredibly important. Focus on getting your requirements done right before you go above and beyond. And above and beyond are my least favorite words in compliance. And there's a reason for that, which is that you have certain requirements that you have to meet, right? That's what's set out in these regulations. And I have never done a compliance audit where someone's come out of it with a perfect score. And that's okay. Generally speaking, compliance is never perfect. But if you're not getting your baseline right and you're just trying to do all of this extra fluffy stuff, it's like building a house without a foundation. So everything is going to be askew in no time. So really focus on getting your fundamentals right and keep focusing on those fundamentals. It's okay to go and build other stuff, absolutely. But before you do that, get your fundamentals right. And even when you're building things that you consider above and beyond, keep going back, keep looking at those fundamentals, and making sure that they're still in line. And as your business evolves, reassess and reevaluate those things. So what made sense when you were an early stage startup, those things that really allowed you to keep a handle on what was happening in the business, those are very different 2 years on, they're very different 5 years on, they're very different 10 years on. And sometimes when you talk about scaling, you have these exponential curves where what worked for you at one point in time all of a sudden doesn't work at all. Did anybody try to get validated with an exchange where you had to do KYC in 2017? Anybody get it done in less than a couple weeks? No? Cool. That's that exponential curve. So when they start the business, they have a lot of manual validation happening in the background because it's cheap, it's easy, they're meeting their requirements. And nobody is, at that point, getting ready for the deluge of what happens when we have 100 new customers trying to register every hour. So when you think about automation, that's important. From a cybersecurity perspective, you have to think about that as well, because what happens when suddenly you're dealing with SIM swapping and DDoS and every other possible attack vector, because all of a sudden every slime bag in the world has figured out that Bitcoin exists and you might have some of it. So those are things that you have to pay attention to, just in terms of what that looks like and what's going to work in the long term. And how do you go between those two things? Because the hardest time to figure that out is when you're in the middle of that exponential growth and you're trying to implement your automation at that point in time. When you have your slow times and you're able to do that work, that's the best time to do it. And I've got a couple minutes left for questions. No? All right. Thank you all for coming, and hit me up if you have questions later.